Welcome back, everyone. I am Eric from Market Meridian. Today is a critical day on Wall Street. Yesterday's trading session delivered a dual breakout that is reshaping every portfolio on the planet. Oil exploded higher in a war-driven rally, and Bitcoin smashed to $75,900, a major psychological and technical level. This is not random noise. This is the war trade in full motion, and it's splitting markets into winners and losers in real time. In today's deep dive, I'm going to walk you through exactly what happened in yesterday's session, tick by tick, move by move. We will cover why oil ripped higher and what the price action tells us about supply fears, how Bitcoin broke out to $75,900 despite macro uncertainty, which sectors got crushed and which exploded, the hidden correlation between oil, Bitcoin, and the Fed, my exact near-term trade plan based purely on yesterday's price action. This is not long-term macro theory. This is yesterday's trading behavior, today's actionable analysis. If you trade stocks, crypto, commodities, or just want to protect your wealth, this video is for you. Disclaimer: this content is for informational and educational purposes only. It is not personalized financial advice, investment advice, or trading advice. All views are based on yesterday's market data and may change quickly. Do your own research before making any financial decisions. Yesterday's market overview, the war trade ignited. Let's start with the big picture from yesterday's close. Wall Street saw a tale of two markets: commodities and energy, strong, risk-on, war bid higher; tech and growth, cautious, range-bound, held back by inflation fears. Bitcoin, independent, strong, broke out to fresh highs. The key driver was geopolitical risk premium flooding back into energy markets after a brief pause. Traders realized that the conflict in the Middle East is not fading, it's intensifying, and that directly threatens global oil supply lines. At the same time, Bitcoin acted like a safe haven alternative and a growth hedge all at once. It ignored the caution in equities and marched to $75,900. This is the new regime, war, inflation plus crypto alternative. Yesterday's session confirmed it. Let's break down oil first. Oil explodes. Yesterday's price action and supply shock. Yesterday was a convincing breakout day for crude oil. Let's use only yesterday's session data. WTI crude, US benchmark opened near $93.42, moved aggressively higher all session, hit an intraday high of $97.65, closed at $95.30, single a day gain, 3.1%. Brent crude, global benchmark opened near $101.50, steadily climbed, closed above $103.40, single a day gain, 2.0%, 3.2%. This was not a fake spike. This was sustained buying from institutions, hedge funds, and commodity trading desks. Why oil exploded yesterday, based only on session behavior, supply disruption fears return. Traders watched real-world shipping delays and risk aversion in the Strait of Hormuz. More tankers are avoiding the area, insurance costs are soaring, and physical supply is tightening. Yesterday's price action reflected fear of actual shortage, not just news headlines. No meaningful inventory buffer. Market participants reacted to the reality that distillate and crude inventories are already tight. There is no spare capacity to absorb a shock. Yesterday's rally showed traders are pricing in higher for longer energy prices. Short covering accelerated. Many traders had bet on a pullback after a small dip earlier in the week. Yesterday's strong open forced aggressive short covering, which added more fuel to the rally. Inflation expectations rebounded as oil ripped higher. Bond yields ticked up slightly. Markets are starting to price second-wave inflation from energy. That's why tech was weak while energy soared. What yesterday's oil action means for today: the uptrend is confirmed, any dip will be bought. $95 support for WTI is now strong. Next resistance, $100. Geopolitical news will drive volatility. Oil is no longer just a commodity. It's a geopolitical weapon, and yesterday's session proved traders are taking it extremely seriously. Bitcoin hit $75,900, yesterday's breakout. Now the most surprising move of yesterday's session, Bitcoin broke cleanly to $75,900. Let's stick strictly to yesterday's trading action. Bitcoin levels, yesterday base around $73,000, $73,500, strong buying above $74,000, intraday high, $75,937 near $75,900, closed near session highs. 24-hour gain, 3.1%. This is a major technical breakout. Let's explain why it happened yesterday, not earlier. Point 4. Reasons Bitcoin exploded yesterday. It decoupled from tech stocks. Normally, Bitcoin falls with Nasdaq when oil rises and inflation fears rise. Yesterday, it refused to drop. That is a bullish divergence and shows strong underlying demand. Inflow demand into spot Bitcoin products. Institutions used yesterday's calm session to add positions. The price held every dip, which told algorithmic traders to buy. $75000 was a key resistance flip. Once price cleared $75,000, stop losses and buy stops were triggered above. That momentum took price straight to $75,900. Hedge against war and inflation. As oil surged, some money moved out of energy stocks and into Bitcoin as a non-sovereign store of value. Yesterday showed Bitcoin is maturing into a geopolitical hedge. What yesterday's Bitcoin action means. $75,000 is now support. The next target is $80,000. Dips below $74,000 should be shallow. Momentum is strongly bullish. Bitcoin is leading risk assets, not following them. This is a new bullish phase confirmed by yesterday's session alone. The correlation breakdown. Oil versus Bitcoin versus stocks. The most important insight from yesterday's trading is the changing correlation structure. Let's simplify. Oil up strongly, stocks mixed, energy up, tech down, Bitcoin up strongly, ignoring tech weakness. This is the war trade correlation map. Energy, long on geopolitics, tech, short on inflation and rates, Bitcoin, long as alternative money. Yesterday's session proved this is not temporary. This is structural. What this means for you: when oil rises on war, tech struggles. When oil rises on war, Bitcoin can rise. Energy and Bitcoin are becoming complementary hedges. The old Bitcoin equals tech correlation is broken. This is a paradigm shift. Yesterday confirmed it. Yesterday's winners and losers. Let's go straight to yesterday's sector action. This tells you everything about Wall Street's positioning. Yesterday's clear winners: energy, XOM, CVX, refiners, strong volume, strong closes, led the market. Traders piled in on the oil breakout. Defensive commodities, metals, mining, followed. Energy higher on inflation hedging. Crypto-related equities moved with Bitcoin strength. Yesterday's underperformers: big tech, Nasdaq leaders, held back by inflation fears from oil. Not crashing, but not leading. Consumer discretionary squeezed by energy costs. Rate-sensitive housing and utilities weak on higher yield pressure. Major indices yesterday: Dow, small gains, and P 500, modest gain. Nasdaq, better gain but lagged. Energy the takeaway: Wall Street is positioned for war inflation. Yesterday's sector rotation was obvious and intentional. What yesterday's session says about the Fed: markets are now betting the Fed is trapped, and yesterday's action confirms it. Oil surging, inflation risks return, economy still soft, no strong growth, Fed cannot cut early, bad for tech, Fed cannot hike, bad for growth, result, higher energy, stronger Bitcoin. Yesterday's price action is a vote of no confidence in easy Fed policy. Traders understand inflation is not dead, energy can keep it high, the Fed's path is delayed. This is not speculation. This is how markets priced it yesterday. Today's trading plan, based only on yesterday's action. Now the most valuable part, my real-time trading plan built purely on yesterday's session. I will give you levels, triggers, and rules. Oil trading plan, from yesterday's close, support, $94.50, $95.00 resistance, $97.65, yesterday high. Then $100 bullish trigger, hold above $95 and break $97.65, target $100 bearish trigger, break $94, pull back to $92 bias, bullish. Buy support, sell resistance, Bitcoin trading plan, from yesterday's close, support, $74,800, $75,000 resistance, $75,900, yesterday high, then $78,000, $80,000 bullish trigger, hold above $75,000 and break $75,900, fast move to $78K plus bearish trigger, break $74,000, dip to $72,500 bias, strongly bullish. Buy dips, avoid chasing. Sector rotation plan: overweight, energy, oil refiners, commodity producers neutral, large cap tech underweight, consumer discretionary, rate sensitive sectors. Risk rules, critical, do not add risk into major news, use tight stops, do not fight the trend from yesterday. Oil and Bitcoin are in charge right now. This plan is 100% based on yesterday's price behavior. No guesswork. No long-term stories. Just levels and momentum. What are key catalysts to watch today? These catalysts will move markets based on yesterday's positioning: geopolitical updates, immediate oil volatility, energy inventory data, supply confirmation, Bitcoin holding $75,000. Sentiment gauge, sector leadership, energy versus tech. If oil holds gains and Bitcoin holds $75,000, the war trade stays strong. Anyway, the war trade is here. Let's wrap this up with absolute clarity, using only yesterday's session. Yesterday proved 3 irreversible truths. Oil is in a strong uptrend driven by war and supply fears. The breakout is real. Bitcoin has decoupled and reasserted bullish momentum, hitting $75,900. It's now a geopolitical hedge. Markets are split, energy wins, tech struggles, Bitcoin leads. The war trade is not coming, it's already here. If you missed yesterday's moves, don't chase. Wait for levels. Buy support. Sell resistance. Follow the momentum from yesterday's close. This is the new market structure. And it's all based on what just happened. If you want daily breakdowns like this, hit subscribe, ring the bell, and drop a like. I'll keep you ahead of Wall Street's war trade. See you in the next one. Thank you for watching.